What are the largest institutions doing in commercial real estate in 2025? In this video, we sit down with Cody Danks Burke. He's a former Cornell endowment and he is now consulting on the private side. But what he has to say about the future of commercial real estate may change how you invest in the next few years.
My career since 2004 has been focused on Cornell. From 2006 until 2021, I ran the real assets portfolio for the endowments. Real estate, natural resources, infrastructure, public, private, equity, and debt. I'm a professor of practice at Cornell, which means I teach and run the program, but I also have to continue to practice. So I invest the real estate portfolio for a family office based in Portland, Oregon. And then I also do a little bit of consulting for a general partner that was in my portfolio at the endowment that's based here in Dallas called Velocis. And they are a real estate private equity firm investing in different property types in the Southeast. So on the endowment side, it was interesting. I was just having this conversation with the partners at Velocis today. I think a lot of people are trying to figure out what are endowments doing, what are big institutional investors doing in real estate. And as I think almost everybody knows, it's been a really rough few years, particularly on the private side of real estate investing, certainly on the equity side. Debt has been a good spot to be, but for a long time, most big institutional investors really wanted to be in equity. They wanted equity-like returns. And so it's taken either a pivot away from equity or certainly pivot part of their allocation of real estate toward the debt side. And yeah, I think the pendulum will swing on that pretty soon. So institutional investors who had dry powder to invest in real estate, coming out of COVID, I think people really put a lot of money into debt. As I think you've seen, everybody and their brother has raised. If they didn't have a debt business before, if they're in real estate investing, they certainly do now. And I think that we're starting to get to a saturation point. Debt, as interest rates come down, as equity becomes a little more attractive, as new equity opportunities open up, I think you'll see that pendulum swing back. Everybody says, when you call them, it's great to see you and happy to stay in touch, but nobody has any capital. That's the case in venture and in private equity. There's been so little transaction volume, certainly on the equity side of commercial real estate, but really on buyout, certainly on growth equity, on venture. The valuations have come down a little bit, not as much as they have in real estate, but there's been almost no transaction volume. And so whether you are a family office like the Agnew company that I work for in Portland, or you're the Cornell endowment, there's just been very little cash flow in most cases back to the endowment. There's a lot of development at the very high end, and there's quite a lot of development at affordable housing, LIHTC driven space. But anything in between is really challenging. There's a lot of discussion about how do we develop housing in a more affordable way that is less labor intensive and is more capital efficient on materials as well.
Is office going to be back from the institutional mindset?
I think it's going to be really hard for any endowment real estate manager to make an allocation to an office fund. Just psychologically, I think people have been so burned that making a specific allocation to office is probably tough.
You see a lot of students just writing more papers about student housing. Why are they more interested in housing right now? Why is that?
If you are a young professional, somebody coming out of college, your biggest cost is rent, right? New York or London or Jakarta, all over the world, it is really hard to find affordable housing for someone just starting out. I think they feel it day to day. How am I ever going to be able to buy, in the U.S. anyway, how am I ever going to be able to afford to buy a house because of where pricing is? And so I really think that's the driver. One of the things that I think on the education side that's permeating everywhere is, how quickly we're responding to AI and data, right? GPT came out in October, and I'd heard about it, and then I went off for Christmas vacation and didn't really think about it. And then my class started in January, and the first assignment I assigned came back, and I was like, oh my God, half the students, not half, but a good 20% clearly used ChatGPT. And the job is changing from, writing out a perfect, bespoke, quarterly report to plugging it into an AI tool and checking. But I think there's a ton of investor demand for multifamily still. I think people view it as a relatively safe way to invest their capital. And I think that will continue. I think housing is a need that is going to be there long, whether it's multifamily, whether it's senior living, whether it is single family homes. I think the housing question, when our students ask me where should I focus, somewhere in the theme is up to where I encourage people to go.